the other sort of relatively new arena for Sebi is the commodity piece. And I wanted, for you as honestly as possible to take stock of the evolution there.
What has happened in this country that right since independence, or maybe right since 1950s, there have been substantial amount of suspicion in the way forward markets or futures market function in the country. People and policy makers didn't have faith. So we had episodes of moving one step and going backwards 2 steps. This has happened over the last 4 or 5 decades. The NDA one government for the first time took this decision that we need to have national level commodity exchanges like we have national level securities market exchanges, and that has really helped. Today we have 3 national level commodity exchanges, but in spite of that national level exchanges coming in, we had one major episode in 2013 when the whole thing was being looked after by Forward Market Commission and by the government directly. So last year government has decided to transfer this activity to us. So Forward Market Commission has been merged with Sebi and we have been given this responsibility. Going by our own DNA, we are going to introduce the same set of rules that we apply on securities market for the commodities market. However, we have to be conscious of the fact that we can't do it on day one.
Yes.
So we have to give them certain preparatory time to be able to do that. So we have started with the commodity brokers, we have started with the exchanges, we have started with the risk management system, we have started with warehouses. So a number of measures have been taken there, and our surveillance system, which was already in existence for the securities, that is also now looking into the commodity market issues very seriously. So wherever we find that there is any attempt to be really playful, we act, and we have acted.
Is the surveillance challenge different in the case of commodities?
It is slightly different because our people had to be trained, and we have sent our people to different parts of the world. For example, we have sent them to CFTC and other agencies outside India. So we have given them some exposure and training, but the technology part is the same, but subject is slightly different. So we had to train them up. That we have done, and training is of course a continuous exercise.
You know, there are a few issues that grab headlines and I think throw people off. I'm going to address a few of them. One is this idea that high frequency trading, algorithmic trading constitutes a large percentage, a large chunk of the volumes in Indian equities, and there is a sort of, a question mark for retail investors who are trying to absorb the implications for them. How would you describe it?
Since you started with grabbing the headlines, let me take you to a slightly different question and then I'll come back to HFT. What is also grabbing the headlines is SEBI's attempt to clean up the large number of companies which are listed and suspended.
I was going to come to that.
Okay. So, we believe that the time for that cleanup has come, and SEBI has come out with very detailed measures to ensure that those companies which are lying suspended for more than 7 years to begin with, they should be compulsorily delisted. So we have come out with instructions that they have to get a valuation done, the exchanges will have to get a valuation done, and there are almost 1200 companies like that, and then make an offer at the valued price to the retail investors or minority shareholders. Where the promoters do not do this, because a question might arise in your mind and anybody else's mind, that what happens if the promoter doesn't come forward, what action can we take? So we have come out with a circular on 7th of September, where we have said that in these cases, the promoters will not be allowed to enter the securities market, which means they can't float any new company, they can't even be directors of any company, and all their shares and dividends will be frozen. So all the economic interest that they have in this company, that will be frozen, and in future they can't raise any money from the market. This is going to be a big deterrent. I was talking to my team and I told them that, look, maybe in spite of this some of them don't come forward, but at least we are not worse off.
Yes.
These companies have not been trading for more than 7 years. Getting them out from this list helps us in reducing our risk, because some people might use these companies for all sorts of unseemly activities. So we are not worse off, and even the investor is not worse off. But believe me, the measures that we have taken by debarring them from entering the market or even acquiring directorships in listed companies, many of them will think twice and come back and pay to them. So this is what we have done.
And what is, do you think, a reasonable time frame to assess the success of this initiative?
I think not less than 1 year.
Okay.
Don't forget that these companies have been lying idle without any trading for more than 7 years, some cases even 10 years. So if they had a viable business, they would definitely have come out. But what will happen, that some of them must be having assets, and debarring them or taking action against them from getting the benefits of that particular company, or even floating a new company, raising fresh money, these are going to be very, very painful to them. So that will have an impact.
High frequency trading.
High frequency, the debate on high frequency trading globally has been a very difficult debate, because the matter is very, very technical, and unfortunately the people who drive the debate are people who have conflict of interest because of their own involvement. So either those sets of people who are technology suppliers to these high frequency trading firms or co-location firms, or those firms themselves are driving the debate globally, not only in India, globally. What SEBI has flagged is that we regard it as a problem, and the problem has to be fixed. The argument on the other side, and I am very carefully watching the debate on the other side, is that, hey, there is no problem, what are you trying to fix? I don't agree with that, because there are several issues with regard to equity as well as about market integrity. Without getting into details, because I should not be discussing a particular case, but we had an incident in a national exchange where this system has been misused for a pretty long time against the interest of the ordinary investors, and SEBI is taking necessary action in that case. So to say that there is no problem is being very brazen and trying to say with a face that everything is right in this world. No, it's not. On the contrary, there have been several examples in other parts of the world and also in India, where these algos have led to market shutting down or some episodes taking place. So we believe that there is a problem. Right now the debate in this country is that lot of people are making the noise that there is no problem. So I don't know what is the starting point. Unless you accept that there is a problem, then you can evaluate the solutions. Unfortunately, we are in a situation that all the demands that are being made are by very important and powerful people who have commercial and financial interest in this debate, and they are all saying that there is no problem. SEBI doesn't believe in that. Coming to solutions, we have given 7 or 8 options, and let me inform you that all over the world my fellow regulators are also evaluating these options in some form or the other.
Yes.
We have a culture of a strong technology presence in our country. So we have eminent specialists in this country. They may not be sitting in SEBI, but they are there in this country. SEBI has constituted a technical advisory committee where these eminent specialists will be there, and whatever measures we finally take will be after due consultations with them.
The fears are that they could be disruptive to the market, the measures. but we'll have to see what the measures are first.
This is the point of view which is the noisiest point of view, but I have also received, SEBI has received a number of representations from retail investors and from small brokers and from investor associations, where they have commented very, very admirably what SEBI is trying to do. So let us not be guided by one set of people who can be very noisy.
Point taken.
So we have to guard against that. However, I have nothing against them if everybody is following the prescribed rules. And in devising the new rules, we will be careful, we will be consultative. But right now we are at a stage where some people on the other side say that everything is fine, leave us. Unfortunately, I can't take that position.
Okay. Two final questions. One, with the impending listing or proposed listing of the exchanges themselves, how does that change the dynamics? Does it change the dynamics at all, even for SEBI?
In 2004, the Parliament amended the Securities Contract Regulation Act, and right since then, listing of the stock exchanges is envisaged. It is not something which SEBI has thought of recently. After 2004, when this was made, this act was amended, a committee headed by Dr. Jalan had recommended that don't allow listing. And the recommendation on this particular aspect was that since they also are first line of regulation for listed companies as well as for broker members, so there should be also a ceiling on the profits that they make, and they should be treated as public institutions, government institutions, and not like for-profit companies. But unfortunately, the SCRA, amended SCRA, provides for demutualization and corporatization of stock exchanges. So SEBI's task is to ensure that there is ample risk management in place. SEBI's task is to ensure that settlement takes place, settlement guarantee fund is there. So whatever SEBI has come out now is after ensuring that we have a very, very robust settlement guarantee fund. If you look at the sequence, we came out with our settlement guarantee fund, where there is a very well defined waterfall of who contributes what, and on a monthly basis that settlement guarantee fund is reviewed, and exchanges and clearing corporations have to top it up. On a monthly basis they have to top it up. After being satisfied that these measures are in place, we have come out with our clarifications and guidelines on listing. Again, we have been careful that we have not allowed self-listing. So one exchange has to list on another exchange, because it stands to reason that if the same exchange is doing its regulation of its own commercial activities, how viable or practical it would be. So this is the law of the land, this is the rule we have provided, we have to watch, but I would like to assure your viewers and the general public that whatever happens, even after listing of these exchanges, SEBI will be alert and ready to ensure that the exchanges are run exactly on the lines that the acts and rules in this country provide.
Fair enough. One final question, which is a personal one. Have you set any must-dos, priorities for, over the next few months, unfinished items that figure high on your agenda?
HFT was of course an item on which we would like to finalize the SEBI's positions. But Manvi, have a heart. I have 5 months to go. This is not my exit interview.
No, it is not, and nor did I imply
so
that.
We'll talk about it when the time comes nearby.
Okay. Well, thank you very much for your time. Appreciate it, value it. Thank you for joining us on NDTV.
Thank you.
Thank you.